Hi, this is Sarah, and this presentation was made on November 4th, 2024 during the Lesson 9 presentation. We're going to do a brief overview of the federal tax, looking at the 1040 with particular attention to the use of the term income, which can mean different things depending on what we're talking about. So here we see that there are several different incomes on the 1040. The first is the total income on line 9. And of course, this only includes certain components that have been added into it. Then adjustments are subtracted to get adjusted gross income, or AGI, on line 11. Then deductions are taken away, which gives us a taxable income on line 15. The tax liability is calculated from this taxable income, and then any credits come off of this tax due. So we can consider the question of what's more valuable, a $500 adjustment or a $500 tax credit. Now the adjustment's going to reduce the AGI, but the $500 tax credit is going to actually save us $500 in tax paid, so it's more valuable. How about a $500 deduction? Well, it does not decrease AGI, but it does affect taxable income the same amount as an adjustment does. But again, it's not nearly as valuable as the $500 tax credit. So tax credits are subtracted from the calculated tax liability. Refundable tax credits are actually listed on the 1040 as if they're payments by the taxpayer, the same as like an estimated payment or a withholding. And we talked the other day about the child tax credit. The child tax credit is taken as a credit in the area where credits are taken that bring the tax liability as low as 0. Then, if there's part of the child tax credit that is not used in that area, the additional portion, now called the additional child tax credit, will be listed as a payment in the refundable tax credit section below, which will show up then on line 28 of the 1040. There are a limited number of refundable credits. The additional child tax credit, which we've just talked about, is one of them. The earned income credit is refundable. The American Opportunities Credit, which is for undergraduate college students, is refundable. And the big one that we see in Massachusetts, the Senior Circuit Breaker Credit. So this has nothing to do with your electrical system. It is a credit for seniors if they pay more than 10% of their income for their real estate taxes plus half their water and sewer bill, or in some cases for rent. So we'll look at this in more detail when we do the Massachusetts training, but it is one of our biggest refundable credits. So taxpayers always want to know if they're getting a refund. So why do people get a refund? Generally, it's because they paid more than their tax liability. Although, again, in the case where somebody gets a refundable credit, it may be that they get that in addition to money that they paid into the system. So the tax that someone already paid includes any withholding, any estimated tax payments that they sent in during the year, any money applied from last year's refund to this year's taxes, plus any refundable credit. If the total paid is larger than the tax liability, then the taxpayer gets a refund. One hint is to try to avoid calling the calculated tax due or tax liability owed, because when you show people that big number and say they owe it, they nearabouts have a heart attack. So the next thing we're going to talk about after this presentation is the dependent rules. And one of the rules is that the dependent can't have a gross income of over $5,050. That's the 2024 amount. So gross income is a different income than any of the ones we've been talking about so far. It may be close to one of these others for a lot of people just because they don't have the additional bits that get added into gross income, but you should look up these rules when you go to, if there's really a question, because they are a little bit different than what you might expect. Similarly, Massachusetts has their own rules about what is included in circuit breaker income. We'll certainly review that in detail when we do the Massachusetts training, but it does include most of the money that comes into the household, including non-taxable portions of Social Security, tax-exempt interest, sometimes non-taxable pensions like a teacher's pension, and any cash assistance that comes into the home like food stamps. So again, we'll talk about that more when we do the mass training, but circuit breaker income is also not the same as any of these other incomes. Okay, so that's the end of this presentation for lesson 9, and we'll go on to the next part, which is a separate thing on dependents and filing requirements.